In 1637, people were selling their houses to buy flowers. Not land, not gold, not even a business. Flowers, tulip bulbs, to be specific. At the peak of Dutch tulip. Be specific. At the peak of Dutch tulip mania, a single rare bulb sold for a grand Amsterdam townhouse. Everyone knew prices were rising. Everyone wanted in. And then, in the winter of 1637, the market collapsed almost overnight. Bulb prices fell by over 90%. Fortunes destroyed. Families ruined. All for a flower. 400 years later, people were selling their houses to buy cryptocurrency. Not land. Not gold. Not even a business. Digital tokens? At the peak of the 2021 crypto bubble, a single NFT of a pixelated cartoon ape sold for millions of dollars. Everyone knew prices were rising. Everyone wanted in. And then, in 2022, the market collapsed. Crypto prices fell by over 70%. Some tokens by over 95%. Fortunes destroyed. Families ruined. All for age. The details change every century. The human psychology never does. Today, we're going to walk through the greatest financial bubbles in history and show you the single pattern that connects all of them. Because once you can see it, you can never be fooled by it again. Every financial bubble in history follows the same 5 stages. Stage 1. A new opportunity emerges, something real. Something with genuine potential. Stage 2. Early investors profit dramatically. The first people in make extraordinary returns. Word spreads. The story becomes irresistible. Stage 3. The crowd arrives. Ordinary people, driven by greed and FOMO, pile in. Prices rise further, attracting more buyers. Stage 4. Prices disconnect from reality. Valuations reach levels that cannot be justified, but nobody cares because prices are still rising. Stage 5. The collapse. Something triggers doubt. A few investors sell. Prices dip. Panic replaces greed. Everyone rushes for the exit. The late arrivals lose everything. The early investors who got out in time are fine. This pattern has repeated for 400 years. Dutch tulip mania. 1637. The Netherlands was the most sophisticated economy. Educated, rational people drove flower prices to the level of real estate. Why? Because tulips were genuinely beautiful and scarce. But then, futures contracts were created. They started trading and rising, becoming a speculation machine. When the collapse came, it came fast. An auction in Haarlem failed. Within days, the market collapsed. Courts ruled gambling debts were unenforceable. South Sea Bubble, 1720 to England. The South Sea Company was granted a monopoly on trade with South America, a genuinely exciting opportunity. The stock price soared tenfold. Even Sir Isaac Newton got caught. He reportedly said, "I can calculate the motions of heavenly bodies, but not madness." The dot-com bubble, 1995 to 2000. The internet was real, but the valuations were insane. Companies with no revenue were valued at billions. The Nasdaq fell 78% by 2002. Trillions evaporated, but the internet survived. Amazon and Google survived. The technology was not the bubble. The underlying reality can be genuine, and the market's pricing can still be catastrophically wrong. Crypto NFTs, meme stocks, the psychology is always identical. The investors who profit are disciplined enough to sell when the story sounds too good. By the time prices fall, it is always too late. Subscribe to Finance Origins. Follow the money. Because the money never lies.